please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. 12 noon, halfway through the trading session as we speak. Minor cuts coming through on the benchmark indices. So the Nifty and the Sensex are down close to about 0.25%, impacted by the weakness seen in HDFC Limited, ICICI Bank, Axis Bank. So all these private sector financials are under pressure. That said, the mid-cap index is holding its head in the green. So currently that's higher by close to about 0.25%. Hi, Nigel.
That's right, Rima. Actually, good to see that at least we have more number of stocks that are advancing in comparison to the number of stocks that are declining. So that's pretty good news, actually. But there are plenty of stocks that are moving around. So let's get straight to our movers and shakers segment. And let's start off with Sonia on InterGlobe. Sonia, over to you.
Well, thanks a lot for that. For InterGlobe Aviation, the stock is under a lot of pressure. That's primarily because of two reasons. One, the fuel costs have gone up for the entire sector. But two, the yields have been under significant pressure for the company's second consecutive quarter that yields have fallen. The management in their own admission says that, the competitive pressures are on the rise, the price war continues, and they will for now focus on market share rather than profitability. A lot of brokerages have scaled down their earnings estimates and EPS and price targets for the stock. In fact, Morgan Stanley also says that InterGlobe Aviation, having the cheapest cost structure in the industry, has hit an EBITDA loss this time around. So, the matters could have been worse for the others in the sector. So, Jet Airways, SpiceJet could also report weak earnings this time around. Back to you.
Okay, thank you very much for that, Sonia. We're watching for Tech Mahindra as well because that's holding up at least in the Nifty pack. That's higher by close to about 3.5%. The top Nifty gainer, the company's beaten muted expectations. So they've delivered a constant currency growth of 0.3% versus expectations of a decline. Even at the margin level, they've managed to arrest the margin decline to only 80 basis points. Expectations were for about a 150 basis points decline. Now, while the telecom vertical, which is about 40% of their overall revenue, had a weak showing in Q1, their revenues were down 6.5%. It was impacted on account of the Comviva seasonality. What the company indicated that in the month of July, that's in Q2, the start of Q2, the company's already signed LOIs worth $200 million in the telecom vertical, which basically gives you revenue visibility going ahead. So the management was quite optimistic about low to mid-single-digit growth in the telecom vertical for FY19. The other business, which is 60% of their business, that's the enterprise business, is doing the heavy lifting. So that saw about a 3.8% growth in constant currency terms, led by strength in BFSI as well as manufacturing. Now, going into the earnings in the last 1 month, the stock was an underperformer. It underperformed the benchmarks by close to about 14%, plus is trading at cheaper valuations compared to its peers at 13.5% to 14%. So that is boosting the outlook. Kotak says the outlook remains promising, so they have an ad rating on the stock. Morgan Stanley says they believe that with this set of earnings as well as commentary, the stock could re-rate. CLSA has raised the target price to 650, also upgraded the stock to an underperform from a sell rating, while Ambit says that yes, the numbers were better than what was feared, but they continue to remain sellers in the stock.
Okay, all right. Thanks so much for that, Rima. Well, personally, all bike lovers will be happy that Harley-Davidson is coming out maybe a 250 to 500cc bike. But for Eicher Motors, maybe that's not such good news because the stock is down close to around 2% odd. Sonia, tell us about that.
Well, yes, a really interesting development in the motorcycle space. Of course, Harley-Davidson's new bikes will come only in 2022, so Eicher Motors still has some time to sort of come out with their strategy. But I take your point, it's a daring move that Harley-Davidson has done to slash its prices, to rebrand its, change its brand strategy, to launch lower CC bikes, and to sort of enter into emerging markets in a big way. That's what Harley-Davidson has announced. So they've said that they're going to come out with a mid-size 250 to 500cc bikes. This will include touring and cruiser motorcycles. Remember, in this space, 250 to 500cc, Royal Enfield is the market leader. They have more than 90% market share. They have their recent launches like the Himalayan, etc. Now, the new bikes will be launched by Harley-Davidson in 2022, as I said, and they're looking at a planned strategic alliance as well with a partner. So let's see how this plays out. For now, definitely more competition for Royal Enfield.
Okay, and Eicher is subdued on the back of that development. What about Escorts? The management has upped the industry growth guidance.
Yes, they have. You know, that's a very important takeaway that we got from the management interview just a while back. They earlier had a guidance of 9 to 11% for the industry for FY19. Today, they raised that guidance to 12 to 15%. They said that the demand is looking solid now for the tractor industry. In fact, it's been a volume-led growth in the tractor business for them. They haven't been able to pass on the entire raw material costs in the form of price hikes. They undertook one in the month of July. They plan to do one more as well. They hold on to their guidance of 100 basis points margin improvement in FY19. Also, they expect a positive surprise from the construction equipment business. A 20% plus growth is what they're looking at in the construction segment order book. So let's listen into what the management told us earlier in the day.
In railways, essentially, it was a combination of some better product mix this time, because it basically depends on what order we execute. So order book size continues to be 300 crores plus as of end of June, which will get executed over next 10 to 11 months. So I think, full year basis, we expect the margin will be close to 17-18% range in this business. Construction, we don't really maintain the order book, but it's more like a retail sale over there. So that's still, I think we expect the year will give us close to, I think, 20% plus growth in construction segment too. Revising it upwards now. We're looking at the growth, what we've seen. So we expect probably the industry should give anywhere between 12 to 15% now growth for this full year.
Okay, there's a quick recap of all the top buzzing stocks we just covered. We have Tech Mahindra, InterGlobe Aviation, Estmates, as well as Eicher Motors. Then Sharda Cropchem, that's the stock in focus on the back of a rather weak set of numbers. The quarter saw revenue growth, but margins were under some pressure, primarily because of raw material costs coming in higher. To discuss this and more, we have Mr. Bubna, the Chairman and Managing Director of the company. Hi, Mr. Bubna. Thanks so much, sir, for joining in. One factor that clearly the street doesn't like is the gross margins getting compressed. Even the net margins, your operating margins have seen some compression. Going ahead, do you believe that in fact these gross margins will stabilize at these levels, and can we have EBITDA margins as well improve from here?
Yes, it should improve.
To what levels?
Around 32 to 34%.
That you're talking about is the gross margin. So you're expecting it to move up from around this 32% to around 33 to 34%.
34%, yes.
Okay. Mr. Bubna, the key reason for the pressure in your gross margins is on account of rising cost pressure from China, right?
Beg your pardon?
The key reason for the gross margin pressure is on account of rising cost price from China, right?
Yes, to some extent.
Okay. So how is that situation right now as we speak? Has it eased, the pressure from China?
I would say the situation has got stabilized right now.
Okay.
But we cannot say how long will it last.
Okay. Also, your start to the year has been good. Your revenue growth is at 34%. You had guided to a revenue growth of 15 to 20% for FY19. Would you look to revise your guidance higher given how well Q1 has been?
Madam, our business is a seasonal business.
Okay.
And it's not uniform. So the quarter 2 and quarter 3 of the fiscal year are the weaker quarters for us. And we have to see how the quarter 4 of 2019 perform.
Okay. Mr. Bubna, the other factor that the street may not like very much is the working capital days. Now, that's gone up from around 75 to around 117 days. And I'm taking a closer look at that. Your inventory days, that's got higher. The creditor days suddenly have come down so much. If you could give us a sense, what's going on with regard to your creditors? They're giving you lesser time to pay?
No, it's not that way. Still, a lot of, we had a higher inventory level in quarter 4 of last fiscal year.
Okay.
So, because of the scarcity of the goods in China, we were able to get the goods after a longer period of delivery.
Okay.
And those payments became due.
Okay.
So we have paid back the payments to our Chinese suppliers on the due dates.
Okay.
But the stocks are still there with us.
So what kind of net working capital days we should be looking at going ahead? Currently it's at around 117.
I would say between around 100 days.
100 days.
Maybe 90 to 100 days.
Okay.
Okay. The company had taken an unsecured loan of 150 crore from the promoters, right?
Yes, ma'am.
Okay. When does the company plan to repay that? And to fund your working capital, do you need some, further short-term loans?
We are looking at some short-term loans, And even otherwise, the company should be able to pay back the promoters' loan maybe 50-70% in the next 6 months.
All right, we'll leave it at that. Thank you, Mr. Bubna, for joining in. So that is Sharda Cropchem. One of the concerns is the gross margins under pressure on account of rising cost pressures from China. But that situation seems to have stabilized, and the company is looking to improve their gross margins up to 34%. As of now, not looking to revise their full year guidance because Q2 and Q3 is typically weak for the company.
Well, we're trading in the red, but one stock that's really catching your attention is MCX. I don't know if there's any news flow, but suddenly that stock has moved higher with a gain of close to 3%, and that entire move has come just in the last few minutes. I don't know whether something's happening on that front. Even Max Financial, we should pull up the intraday chart out there as well. Big spike is what we're seeing on both those two stocks. But some of those stocks are not doing very, very well. Let's start off with Idea. Well, those numbers didn't look very, very good, isn't it, Rima?
Yes, very disappointing at the operational level. So the company has reported margins of 11.2%, lower than expectations of 14.5%. And look at the margin trajectory in the last 4 years. So in FY16, same time, the margins were closer to 37%. Now it's down to 11%. That's the extent of how competitive pressures has eroded the company's profitability. Even the reported revenue growth is down close to about 4%. But on an adjusted basis, the company has reported a revenue decline of close to about 2.9%. And when you compare it to the rest of the peers, it's actually a weaker performance because Bharti reported an increase in their revenues to the tune of 1.2%, while for Vodafone, it was down about 1.5%. Profit, as you could have seen on your screen, was boosted on the back of the tower sale. Even the balance sheet of the company is very weak. So the debt stands at close to about 50,000 crore rupees. The net debt to quarterly EBITDA annualized stands at 19 times. Not just that, because of the high debt, the company's capex is also lower than peers. So 980 crores is what Idea invested in capex. Compare that to Bharti, which was at, or a Jio, which was at 17,000 crore rupees. Also, the company lost 6.6 million by way of subscribers in the quarter. So cut it whichever way, Idea has had a disappointing quarter. Now everyone is awaiting that the two companies, Idea and Vodafone, will merge, and then the street will await the kind of synergies they can actually extract. But this is probably the weakest performance by Idea ever since its listed days.
Okay, all right. Thanks so much for that, Rima. Well, Canfin Homes is the other one. That's sulking in trade. It's down close to around 8%. That's this after posting the slowest loan growth in the past 8 quarters. The P&L growth, in fact, is sluggish, and the disbursements are weakest ever. We spoke to the MD of the company earlier today. Let's hear out what he had to tell us.
Karnataka is yet to pick up to the normal growth rates. The sector as a whole has been a bit slow. The rest of the country, we have disclosed the rest of the country, the sanctions have been up by almost 16% and disbursements by around 14%. And even the outstanding loan book is growing at around 23%. But having said that, I source almost a third of my portfolio of my loan book from Karnataka and around 16-17% from Tamil Nadu. These two constitute almost half of the loan book. Post-RERA, the customers' confidence has increased significantly. There is a lot of demand. The population has not reduced in this part of the country. Only thing is, somebody has to really address the supply side issues, particularly in the segment we operate in.
All right, Redington's net profit is down by 40% on a quarter-on-quarter, on a year-on-year basis. So that is the number that you can see. 85 crore compares with about 85 crore is the profit that they've reported. Their consolidated revenues too are down close to about 6% on a quarter-on-quarter basis. I think the numbers that we're flashing are actually on a quarter-on-quarter basis, as I can see over here, not on a year-on-year basis, because on a year-on-year basis, there is actually a growth that you can see in your revenues. I think even for the profitability, the numbers perhaps are, I think, what are getting flashed are on a quarter-on-quarter basis. We'll just wait for those numbers to come by properly. Ashwini Gujral and Rajat Bose in the meanwhile join in. Ashwini, your thoughts on the day so far, and in particularly HDFC Limited, that's under severe pressure.
It's down 2%. That's not very severe. But I would think this is basically a small correction. And right now is a good time to get long on Nifty as well as Bank Nifty, because large stocks are now beginning to move up. and you can't have a market lower if Reliance, Maruti, etc. start to move up. Even on HDFC, it's a small correction. People need to get long on this market instead of trying to get scared by corrections. So my sense is by the close, you could be higher on the indices and a lot of the negativity could be out. On individual stocks, RIL is a buy with a stop of 1160, target of 1200. Maruti is a buy with a stop of 9400, target of 9620. And Hero Moto is a buy with a stop of 3260, target of 3400.
All right, let's get in Rajat's picks as well. Rajat, view on the Nifty as well as your trading picks for today.
See, as far as Nifty is concerned, I would be closely watching the level of 11,330 to about 11,335. Unless this level is taken out, we should not be expecting any further rise in the Nifty, at least for today. This is a critical resistance level, although this is beyond the all-time high posted today. What I would say is that this is one critical level that needs to be taken out decisively before the Nifty marches further ahead. Having said that, what I would say is that unless you see the Nifty falling below 11,220 on the downside, there is no major threat as such. All these dips would be bought, just as major stocks like Maruti, Reliance and others are moving up. I expect the upswing to continue, so maybe eventually that 1130, 330 to about 11,335 would be taken out. Having said that, the two calls that I have, one is Maruti, stop loss below 9455 and target would be 9525. It can even exceed our target and move further up. And Hero Moto is on a recovery trail. 3267 is my stop loss and 3345 is my target.
Okay, all right. Thanks so much for that, Ashwini, as well as Rajat, for joining in and giving us those picks. By the way, the bit of a recovery is what we're seeing in the markets. We're back to above that 11,300 odd mark. So let's get the intraday chart up for you. And that has to be Reliance Industries. That's the boss in there. Just take a look at that. It's moving higher and it's moving higher very, very rapidly. And that's the reason why we're at the high point of the day. Even in Bharti Airtel, that stock as well is moving higher. So good to see a couple of these stocks, they're doing well. And that's helping really the Nifty move to the high point of the day. But we have the European markets that have just opened up. So let's pull up those rates and let's see what exactly they're doing. The FTSE more or less flattish. Remember in yesterday's trading session as well, the FTSE ended as flat as can be. Both the CAC and the DAX, they ended with cuts of more than 0.4%. Today, both those two markets, in fact, have opened up more or less flattish actually. Well, on that note, I think, that's an important alert. Reliance Industries has surpassed TCS in terms of total market capitalization. So that's an interesting one. Let's pull up the TCS stock. Remember, TCS was the first one to get to that $100 billion odd mark. But it seems that Reliance Industries, that's thumping along. And that explains why, in fact, it's overtaken TCS as well as we speak.
So many engines are firing for Reliance Industries, right? Their petchem margins is doing very well. Retail is now quite a giant in the entire retail industry. Jio positively surprised on all parameters despite the competitive intensity. Plus, there's so much talk about unlocking a value going ahead in retail as well as in the telecom venture. So all the big investments that the companies put in the last few years seem to be bearing fruit. Of course, the big concern is the kind of capex as well as the total debt on Reliance's book. But then I guess there is not much doubt in terms of the ability to repay it. Of course, standard disclaimer, Reliance Industries is the owner of the channel that you're currently watching. But there you have it. In another milestone, Reliance Industries surpassed TCS in the market cap. But I guess this might just continue to happen back and forth.
Yeah, absolutely. Both these two will be racing ahead of each other. So we'll have to keep an eye out on that battle as well. But interesting, we just got the contribution chart as well up for us. And that's an important point. Reliance Industries now is heading towards more than that 9.2% odd mark. So it's closing the gap with HDFC Bank. Remember, at one point of time, HDFC Bank was going towards 11%. Reliance Industries was closer towards 8%. So it's closing that gap down. And in fact, let's see the battle from here, because Reliance Industries and HDFC and both the HDFC twins and Reliance Industries, you put them together, you have nearly around 27-28% of the Nifty just on those three stocks. So that's rather important as well. Well,
will the QIP by HDFC Bank change the free float, etc.? So that could also, push up the weightage, right?
Extremely valid point, Rima. The weightage currently is calculated on a free float basis, and the shares that will come in via the QIP, in all probability, that will be considered as free float. So that gives HDFC Bank as well, more amount of weightage, and the weightage will increase from there. Back in the day, maybe around 8 to around 9 years ago, used to have the market capitalization that used to determine the weightage. Now it's just the free float. So when you're issuing more shares, that's going to be in the free float, not in the, and it does